I want to start with a simple idea. Most people who find this video don't think in terms of financial products or strategies. They usually have a much simpler thought in their head. And that thought is, I want to be my own bank. Not in a complicated way, not in a technical way, just in the sense that they're tired of running their entire financial life through institutions they don't control. What I'm going to walk you through here is not a product and not a pitch. It's a framework for how a personal banking system actually gets built, step by step, and how people use it in real life. Before we talk about problems, I want to be clear about the end goal. The goal is not to learn about banking. The goal is not to understand insurance. The goal is not to memorize concepts. The goal is to be the owner of a functional banking system. Something that exists, something you control, something you can actually use. If, at the end of this process, you can honestly say, I have my own system in place, then this worked. When someone owns a real banking system, two things naturally follow. And I want to be very clear. These aren't bonuses or tricks. They're consequences. The first is that you begin to control how capital flows and on what terms. That means you're no longer reacting to someone else's rules. You're not structuring your life around approval processes, loan products, or fixed schedules. Capital moves according to your priorities. When you deploy money, when you pay it back, and how long you carry it becomes a decision, not a constraint. The second thing that follows is financing optionality. Optionality simply means you're no longer forced into one path. Before, if you wanted to make a purchase or take advantage of an opportunity, there was usually only one default option. Go to the bank, apply, and accept whatever terms were offered. When you own a banking system, that changes. You can still use banks. But now you're doing it because it makes sense, not because it's the only way forward. And that difference is subtle, but it's everything. When financing becomes a choice instead of a requirement, the entire relationship flips. You stop organizing your financial life around lenders and start organizing it around your own system. Now let's talk about the first problem most people are actually dealing with. Even if they've never said it out loud like this, I'm financing my life through banks instead of myself. Think about how normal this feels. Cars, homes, businesses, education. Almost everything meaningful gets financed, but always through someone else's system. And the frustration isn't just interest. It's the realization that your entire financial life runs through institutions you don't own. So the promise here is simple. Finance your life through your own banking system. That doesn't mean eliminating banks. It means you're no longer dependent on them as the starting point. The first job is to diagnose the leakage. And by leakage, I don't mean bad spending or poor decisions. I mean simply noticing where money is leaving your personal system today. Where are you borrowing to move your life forward? Where are you required to involve a bank or lender just to act? Where does money consistently flow outward in order for things to happen? For most people, this is eye-opening. Not because they're irresponsible, but because financing through banks has been normalized. The second job is to redirect the cash flow. Instead of money immediately leaving your system and being controlled elsewhere, capital begins inside a structure you own. That doesn't mean you stop spending or investing. It means the starting point changes. Money originates with you first, and then it gets deployed. And once that shift happens, the logic becomes very simple. If money starts with you, you don't need to borrow it back from a bank. You're no longer asking permission to use capital. You're deciding how it gets used. And the bridge that makes this make sense is simple. If money originates with you, you can finance yourself instead of the bank. This is what we call the capital flow redirection framework. We're not changing behavior first, we're changing where money starts. Once people see that, the next frustration shows up immediately. My money isn't accessible when I need it. Retirement accounts are locked. Investments require selling. Savings feel fragile. People realize they technically have money, but not usable money. The promise here is access. Always have access to the majority of your capital. Not by guessing, not by hoping, but by design. The first job here is to diagnose access friction. And what I mean by that is very simple. Where is your money today? And what has to happen before you can actually use it? For most people, once they really look at this, they realize something uncomfortable. A lot of their money technically exists, but it isn't usable. It's in retirement accounts with penalties. It's in investments that have to be sold. It's in places where access comes with delays, approvals, or consequences. So the issue isn't that people don't have money. The issue is that access is conditional. The second job is to reposition capital, so access is built in from the start. This isn't about chasing returns or moving everything around, and it's about intentionally placing capital in a structure where liquidity exists by design, not by exception. And once that's done, the logic becomes very straightforward. If capital is stored where access exists by design, you don't have to interrupt your long-term plan just to handle a short-term need. You're no longer choosing between growth and liquidity. You're simply using your system the way it was built to be used. This is the liquidity first access path. Access comes first. Growth comes second. That's how banks think. And now so do you. Then there's the third frustration. Even when I borrow, the terms are stacked against me. Amortization, front-loaded interest, fixed schedules. The rules always favor the lender because they're supplying the capital. So the promise becomes, set your own borrowing terms, not by negotiating harder, but by changing the relationship entirely. The first job here is to diagnose the term disadvantage. And what that really means is taking an honest look at the rules attached to the money you borrow today. Fixed schedules, front-loaded interest, terms that don't change, even when your situation does. Most people eventually notice that the structure of these loans is not neutral. The timing, the repayment schedule, and the way interest behaves are all designed to benefit the lender, not the borrower. And that's not a criticism. It's simply how lending works when you're not the one supplying the capital. The second job is to change the lending relationship itself. Instead of borrowing from an outside institution and accepting preset rules, financing happens inside a system you control. The structure changes, the flexibility changes, and the decision-making changes. Not because you negotiated better, but because the relationship is different. And the bridge that makes this make sense is the most basic truth in all of finance. Whoever supplies the capital sets the terms. Once you understand that, everything else becomes obvious. This is the self-directed financing sequence. You're no longer just a borrower. You're the source. All three of these together form what we call the personal banking system blueprint. It's how people go from saying, I want to be my own bank, to actually being able to say, I use my own system instead of the bank. So if this makes sense, and you want to see what a personal banking system would actually look like in your situation, the next step is simply to have a design conversation. Below this video, there's a button you can use to schedule a blueprint call. That call is about fit and clarity, looking at how you currently finance your life, where you're dependent on banks, and whether building your own banking system makes sense for you. There's no pressure and no obligation. If it's a fit, we'll talk about next steps. If it's not, you'll still walk away with a clearer understanding of your options. When you're ready, you can schedule a time that works for you.